Good morning, everyone. We will get started in just a few minutes. We've got a few more people logging on right now. But as you are logging on, jump inside the chat box and let us know who you are and what business you're with so that we know who is here and who we're talking to. All right, Peggy, are you ready to get started?
As you said, it's only taken 2 years and I unmuted myself without being told. It's a miracle.
We're starting out strong today. Well, I will go ahead and get started with a few announcements of upcoming events from the chamber. And as you see in the chat box, we have a few staff members here too, and they'll be providing links to make sure you can register for those events. First up, we have our speed networking event. We do this once a year. This is probably one of my favorite networking events that we actually do because you get to meet just about everybody in the room and you do it really, really quickly. So this will be happening next Wednesday, so less than a week away. Tickets are $10 and that includes lunch from Smiley's Pub. And we have a limited room with the space and with COVID, so make sure you register now. Seating is limited. If you've never done speed networking, think about speed dating, but you're just doing your professional stuff today. Next up, we have a special business education webinar coming up on November 8th from 11:30 to 12:30 p.m. That's supposed to be 11:30 to 12:30, and the PM throws me off every time. And that's going to be addressing the new employee tax credits that are coming down as a result of COVID. And so Cody Short from Brady Ware will be discussing those. A lot of businesses are leaving money on the table because they are not claiming their tax credits correctly. So Cody will be giving us an update on those. Next up, we have Professional Headshot Night. Hype Wayne County is hosting a professional headshot clinic with our own Daniel Arthur taking the pictures. And you can join us on November 17th from 5:30 to 7 at Bambly Insurance. That's open to anyone who is 21 to 40 and would like a new headshot. And then one of my favorite events of the year is our couch shopping event coming up on December 1st and again on December 10th. This was an event that we did during COVID because we knew people weren't out shopping as much as they normally do. So it's a Facebook Live and we invite all of our small businesses to come and participate. They can sell their products and you can watch from the comfort of your own couch in your PJs. We will have specials that night at restaurants so you can order in and shop online. And last year we did over $5,000 in sales in under 4 hours. So that's a lot of shopping that took place. And then the next event is on December 3rd, and that is State of Growth. This is the last in this series for our state of events. And this one will be talking about how we grow our community post-COVID into the next new world that we're experiencing. And we have a great panelist or a great set of panelists that will be speaking, and that registration will be opening later next week. Yep. Let's see, the next thing, we have a blood drive on December 16th, and that will be hosted at the Richmond Senior Community Center. If you haven't donated yet this year, make sure you get signed up. And then Hype Night at the Theater on December 17th. This will be to see the best Christmas pageant ever. Tickets are available online now. But if you want to go with Hype and sit in our reserved seats, make sure you register through us. We will be doing dinner at Smiley's Pub before that. So it'll be a great evening on the town. And then, of course, I cannot let you leave here without knowing that our next annual dinner is coming up on January 21st. Yes, we did one in August, but we are going to do one again and get back on track with our calendars. Lynette is off screen today because she's already starting to work on annual dinner, and you can see the stress, right? So annual dinner is coming up January 21st. Mark your calendar. We have amazing award winners for this year. And of course, before we go any further, we have to thank all of our sponsors for bringing today's webinar to us. We have a great lineup of speakers today, and we're going to talk about a really big topic that I think is important. So I'm going to hand it over to Peggy Sinova, the Regional Director of the East Central Indiana Small Business Development Center. Peggy?
Thank you, Roxy. I think I know a lot of people here, but I'll just let you know that I am the Regional Director, as Roxy said, and we help businesses start, grow, and flourish. So at no cost to our clients, because we're paid for by federal, state, and local funds, we are able to help small businesses, and we really appreciate the Chamber's letting us be a part of these lunch and learns, although we don't have so much lunch anymore, Roxy.
I'm trying to eat my lunch over here.
I'm sorry?
I'm trying to eat my lunch over here when nobody's looking.
I was going to hand it back to you and let you introduce our panel participants.
Absolutely. So first up, we have Perica Short from Three Rivers Federal Credit Union. Perica, why don't you introduce yourself?
Hello, everyone. Like Roxy said, my name is Perica Short. I'm a relationship manager here at Three Rivers. I offer support to all of our members, but especially our business members, with any kind of transactions or anything that they would need personally for their employees or for their business. And I'm kind of a connector. So if I don't have an answer, I will find someone who can help you. So always assisting any way I can.
Great. Thank you for joining us today.
Thank you.
Next up, we have Tim Porter. Tim, go ahead and introduce yourself and your new job title and location.
Hey, Roxy. Tim Porter. I'm with Farmers and Merchant State Bank. I'm a commercial lender for them. I've been with them for about a month now. Prior to that, I've been in commercial banking for about
we might have lost
12
him.
years. I've been in banking as a whole for about some. You get me?
Tim, it's a little hard to hear you. You're breaking up. I don't know if your internet is stable. You might want to try a different internet if you can.
Okay, you got me now?
Yep.
Okay, I apologize. So yeah, I've got 27 years banking experience. About the last 12 have been commercial focused. And prior to that, I was in retail and mortgage lending.
Great. Well, I am excited to have both of you here. We have a series of questions that we're going to ask them. Peggy will moderate the discussion, but as you're hearing their conversations, if you have more questions or you'd like follow-up information, you can drop a comment in the chat box or send me a private message, and I will work with our panelists to get those questions answered. Peggy, I'm handing it over to you with question number 1.
Okay, well, as you work with small businesses, what do you see the best practices for managing their financial records? As I work with small businesses, some of them have a difficult time determining how they should manage their financial records, and some of them just don't manage their financial records. So, Perica, do you have any thoughts on that question?
Well, I always encourage our business members to have a paper trail. Kind of keep track either on an Excel file of how their expenses and income they receive. So that way, when it comes to tax reporting times, that they have some kind of record, so they're not just kind of pulling numbers out of the air. So I always recommend them talking to their accountant, kind of seeing what kind of different avenues they can go. Some accountants like QuickBooks, some like Peachtree. So it's whatever's best for your accountant, and also giving your accountant login for your banking, because that way they can just log in, get your statements, look at your history, and kind of one less step for our business owners.
Thank you, Perica. Tim, do you have any thoughts on that question?
Yeah, I agree with her on that. The communication with your accountant is kind of key, and some people take a shoebox of receipts at the end of the year and give to their accountant, and you're not a very good client of your accountant if you do that. So We are in that time of the year now where some companies, it's advantageous for them to purchase equipment to minimize tax liability. You don't really know where you're at with that unless you have monthly or quarterly consultations with your accountant, and they can kind of tell you where you're at in the year. So it's one of those expenses, a lot of people, small business, when you're starting that up, you try to minimize your expenses, but that's probably the best bang for your money is hiring an accountant and letting them, do their job and show you ways to minimize that tax liability.
Thanks, Tim. Any other questions that came up from the group about that? You can put it in the chat. Let us know if we haven't covered what you think we should cover on that question. Seeing none, we'll go to question 2. Tell us what a line of credit is for small business, and do you think that this is a good tool for them to manage their cash flow? I work with small businesses every day who worry about small cash flow deficits, and I just thought maybe you could tell us a little bit about what you think a credit line would work for them. We'll let Tim go first this time.
Yeah, so the line of credit, I suggest that for all of my customers. It's a lot of times people don't need funding, but a line of credit's in place to help them not only during their time of need, but time when they don't have that need. And so once it's in place, most of those are 12 or 24 month terms. The benefit of the line of credit is, if you're in manufacturing, it allows you to buy materials or supplies needed to manufacture what you do, and gives you time to pay employee wages and until the product is made and shipped and sold. And then usually there's a lag time until you get paid for that. So sometimes when people get an order in, it's a 60 or 90-day process before you get paid, and a line of credit is a great tool to kind of bridge that gap, to kind of pay for expenses up front, until you get funding to reimburse yourself. So I always suggest them, and the best time to get a line of credit's when you don't need one. It's much easier to get credit when times are good. And if you don't use it, you're not making a payment. Most of them are interest-only payments based on the outstanding balance you have at the time. So if you don't have a balance, you don't have a payment, but that safety net is always there for you.
Erica, you have anything to add to that?
And just something to remember on line of credits, it's not a fixed rate. It is an adjustable rate, similar to a credit card. So just making sure you're not utilizing it as much like the full balance, that it's a short-term kind of loan that you want to use or line of credit. So if you need to have something longer term, like you're thinking 5 years or longer, you need to get a fixed rate loan. So a lot of people might utilize it too much. So that could also hurt the business. Just making sure that you try not to use 25% of your availability, kind of showing that you're not living on it for your business. For the line of credit, you're just using it for short-term purposes.
Thanks. We have a question in the chat from our last question, and I think it's about accounting, and it is it necessary to keep the receipts if you use a credit card for expenses?
I don't think you need to. You could use your credit card statement to verify the amount that you used and just kind of notate what it was used for.
Do you agree with that, Tim?
Yeah, I think the only thing I would caution on that would be some accountants would put certain expenses in certain buckets. And so without, you might have something for supplies, you might have a bucket for, equipment, you might, payroll, whatever. And without that physical receipt that details what that is, I don't think your accountant would know what bucket to put that in to properly place it on the tax returns.
We have received a question as well that says, how much should businesses plan to always have in reserves? So is there like a percentage or a dollar amount that if you have this amount, you are good to go?
So I always feel like cash is king, and people should, especially in the rate environment that we're in now, seen an environment like this with rates this low for many, many years. So I always tell people keep their cash, and there might be a day when rates are at 10%, and if you have cash and can self-finance something, your money might be working better for you self-funding it. We don't really look at any magical number that a borrower needs to have a certain amount of cash. We do like liquidity, though, where if somebody can demonstrate that they have cash available, that on a borderline application that would help that borrower tremendously, just showing that they have been able to establish some liquidity, and liquidity could be defined in many different ways. It could be cash, it could be equity that you have in equipment or real estate. Of course, cash can be converted quite easily, but anytime you have liquidity in your assets or the business itself, that would help as well.
Great. There was another question in the chat box that says, I'm new to the business world and I'm not sure how you go about looking for an accountant. Can you point me in the right direction to find a good accountant, or maybe just give some tips and tricks for what to look for?
I've always found word of mouth from other business owners in your field, especially, just so that way you can have some good comparables of what kind of needs and wants that you want as from your account.
I think that it's great. The word of mouth is wonderful because they're probably businesses that you respect. I just had a client yesterday who was interviewing accountants. She said of interviews with 3 accountants, and the first one she talked to, she didn't feel like she gelled with. So you might want to think about talking with more than one. Do you have any ideas on finding an accountant, Tim? Did we lose Tim?
I think Tim's internet is giving him fits today, so maybe we can get him back in.
I think we probably can.
Why don't we move on to the next question, and we'll see, and we'll let Perica take this one.
When will the bank evaluating my loan request expect for my new business to show a profit? Because lots of people think that they need to get profit the day they open, and I don't know, Perica, what is your thought process on that?
To be profit, of course, your first year, but normally it takes 3 to 4 years. It's kind of a standard for business to start showing a profit. With startup costs with a new business, it's hard to specify an exact time frame because every business is different. It just depends on the product you're selling. It depends on the high demand. It's just really, it's hard to determine an exact time frame. Your financial institution is going to look at your trending growth quarter to quarter to see if the business is heading in the right direction to achieve potential year-over-year growth. But to actually be profitable, that's really, you can't put a timestamp on that.
And what you said about being reasonable about what you think that's going to, that growth is going to be, do you think that should be indicated in the loan request?
Correct.
So when you're doing your business planning and you're doing your financial projections, if you show that you're going to have profits from day 1 or at week 10, the bank's going to look at what you guessed you were going to do based against what you're really doing. Am I right, Perica?
Yes, they'll want to see a plan. How are you going to get there? Don't give me a number. We need to know how you're going to get to that number.
Thanks.
No problem.
Okay. Question 4.
We have Tim back. So
oh, Tim is back.
Maybe he's able to, I don't know if he has audio yet, so we'll see. We can move to the next question.
Okay, this is that dreaded moment in a business owner's life. What happens if I'm not going to be able to make that loan payment coming next month? What is the best action for me to take?
Call your financial institution. That's always the best answer. Any financial institution wants to work with you. They never want to go through a hardship and have you have a worse hardship by not having communication. They will work with you. It's just they need to know you're having a problem.
Tim, have you ever had that happen to one of your clients?
Yes. Yeah. Yeah, I agree. Communication is the key to that. And when the communication's cut off, I think the lender kind of feels like that you've given up. And so there's many ways of working around that. But if you don't have the communication, then nobody knows what those ways are. And so one of the things that I think the Small Business Development Center always helps people with is, what is that exit strategy? If something goes south and things, don't go as planned, and sometimes they don't. I've always appreciated you guys bringing that awareness to people that, this might not work, and if it doesn't, what's the route we're going to take to fix it, or, what kind of changes could you make along the way? So I think communication with the lender, and then, the Small Business Development Center is another good resource for kind of getting things back in line.
We love those commercials. Thank you, Tim. So this is a big question I get from clients. How do I establish credit for my business? I've registered with the state. I've got my EIN number. I have some money in the account, but how is the world going to look at my business separate from me? Or when is the the banking world going to look at the business separate from me?
Yeah. So from my experience in commercial lending, the world always wants to see you as an individual guarantee a loan. And there's times where they do not require a guarantor on the loan. But if you get an SBA loan, the SBA is always going to require anybody with a 20% or more ownership of the business to be a guarantor. And just on small business lending in general, it's very rare that you'll find a business that's able to get financing without a guarantor from anybody that's over a 20% owner. And so I think back in the day that was a little more common, loans to businesses solely on the business without any guarantors, but that's been my experience.
What do you have to add to that, Perica?
I agree. Guarantors are the ones that we majorly look at. Every financial institution is different how a business owner will qualify for a loan or line of credit, but them having a great guarantor or multiple guarantors that can back up with a certain credit score, debt pay history, and ability to pay back the loan, that's really what they're wanting to establish. So if a business is wanting to help the guarantors plus the business, I always recommend a credit card. Credit cards are typically very easy to establish that kind of credit. Use it, pay it off, but don't keep a large balance on it. Again, same thing, same rule. Your availability, don't use over 25%. Don't look like the business is living on it. Just kind of establishing for the guarantors as well as for the business.
Good information. Now, kind of a question that I get from time to time is, what is a DUNS number? And many small businesses don't even know what that means, but I bet Tim and Perica know.
It's a number, a business credit file you open with Dun & Bradstreet. It's not something we really see in our little rural areas. It's more for corporations. I think that's going more worldwide, globally. They kind of look at each other's businesses. I don't know as much about it. I don't know about you, Tim, because we don't really see it in my market.
Yeah, I agree 100% with what you're saying. I don't see that in my world, and I think that is multi-million-dollar companies that would have a Dun & Bradstreet number. But I've never had a customer that I know of that has one, and I've never had a credit committee that's asked for a report on Dun & Bradstreet.
It's so funny that we're talking about DUNS numbers today, because in order to create an app on Apple or Google Play, you have to have a DUNS number and it has to be updated. So if you do have a DUNS number, keep it updated, because It's not fun if you don't. We did get a question in the chat box asking to explain a little bit more about SBA loans and how those work, who qualifies. And Peggy, maybe that's a question for you to start with.
Well, a lot of people think that an SBA loan, actually, I've had clients think that I'm going to give them the SBA loan, or that the SBA is who you get the loan from. But in fact, SBA is just a guarantor for a loan. And the way I understand it, and Perica and Tim can correct me if I'm wrong, it's just that sometimes if a loan is just a little bit shaky, or they're wanting an extra bit of guarantee, SBA comes in and helps along the way by helping guarantee that loan to the bank.
Right.
Oh,
Yeah,
good. I'm glad, Tim. I should know that. I'm glad I do.
100% right.
What else could you add to that?
Well, for what I see on an SBA loan, or the times I've used an SBA loan, when we think about, say you're buying a pet store, and the owner of the pet store has worked 30 years. They've built the business. It's got the biggest name in the area, and everybody knows the place. And because there's so much traffic, we call it goodwill. And goodwill is just, there's nothing guaranteed anybody will come in and buy dog food or get shots for their pets or whatever. But you can look at historical data and say, just about every year we can expect this many customers to come through the door, but there's no guarantee on it. A dentist's office are this way as well, where people get their teeth cleaned once or twice a year. There's nothing tying them to doing that, but you can look at the numbers and say, yeah, they pretty much guarantee this amount of people will come through. So looking at a company like that, like even a dentist office, if they're leasing the building they're in, and you look at, if the bank looks at the value of the assets that come along with that, you're going to have a couple of chairs, some office equipment, some drills, some things like that. You might be talking $10,000 or $15,000 in assets that the bank can say, okay, we're going to hold this as collateral on the loan. But the dentist wants $1 million for this practice that he's built up. So that's where the SBA would come into play. And the SBA would say, hey, I know you're short on collateral. And if this thing doesn't make it, the bank's going to lose, $980,000 on this because there's no collateral when, if they liquidate the credit. So the SBA will come into the bank and say, Mr. Bank, we're gonna guarantee you a certain percent, and sometimes that's 50%. It goes up to, I think, 85% guarantees. And so that helps the bank get comfortable that, hey, if this thing doesn't make it, we're not going to lose 980,000. We might only lose 150,000. And so the SBA, for me, it helps mitigate some of those risks. And that typical risk for me is just a collateral shortfall where there's not enough collateral to securitize loan.
Thanks, Tim. Erica, you have anything to add to that about SBA lending?
SBA is one of those things that I think so many business members didn't even realize it was out there until you heard about the PPP. Once they heard that PPP, they're like, hey, what is this? Where do I find it? How can I do it? So it's an actually amazing products that they can offer. I know there's multiple avenues of loans that you can do. SBA 7A is probably the most popular. I recommend all business members going out and looking at the SBA website, kind of looking at the parameters, and it actually tells you lenders that are available, but it actually works with SBA. So that's really important because people have to remember not all financial institutions do SBA loans. So it's good to find out you're going to the right direction.
Thanks. And another product of the SBA is micro lending. And in Indiana, that is called bankable. And they are not in competition with Tim and Perica. They are for those people who have been turned down by lending institutions. And they help really small businesses and even larger businesses because they've been tasked with making clients bankable. So that's their name. They lend to people who can't get a bank loan and help them to figure out how to improve, probably not their DUNS number, because Tim said he doesn't use that, but to improve their credit score so that they can get a conventional bank loan.
Yeah, and Peggy, I think that's kind of like an incubating type deal where they assist people for a year or 2 years or 3 years until they can kind of fly out of the nest and do their own thing. And yeah, it's a great resource for people for sure.
Roxy, do we have any other questions from the group?
We do, but I'm going to hold off on them and go to the next question.
Okay, I think we asked it.
Let me explain what that one is.
I got ahead of you, Miss Roxy. I got ahead of you. So we are ready for the next.
Okay. So we do have a few questions from the chat box. And if you have questions for our panelists, please drop them in the chat box. The first one is something the chamber gets asked quite a bit, actually, is does my Better Business Bureau rating affect how much I can get from the bank or vice versa? Does that have any effect on my business?
Really good
No.
question.
No.
We don't look at a BBB rating. We'll pull a credit or a report on anybody that's a 20% or more owner of the business, and that data is used, but we do not rely on any other outside sources.
I think for the Better Business Bureau, that's more for people looking for different businesses to work with. So you want that to be a good score if you want potential customers. So that's something you really need to focus on if you're getting bad reviews and things like that, of how to make things better for your business.
Great. Then the next question, oh, I heard somebody speak. How often should you review or revise your financial plans?
I think that would be based on if you are a startup, you would want to change it, but it depends on the time frame of your business. Are you 10 years in, 20 years in? It's just based on if you're growing, if you're steady, or if you are new. So it'd be different for every business owner.
What are your thoughts on that, Tim?
Yeah, I would agree with that, and I would. I like to see people review those annually. I like to meet with my customers annually and just see how the prior year went, what their goals are for the next year. And, sometimes an eye opener for a business is that, they say, oh, I killed it last year. I doubled my profits. I hired all these people. I did that, but I made less money. And so you never really know. Every business has a tipping point where, this is the sweet spot where they're going to make the most money is, 7 employees rather than 15, and maybe you lose money at 15. So I think without looking at those annually and reviewing with your accountant and your lender, you never really know, where your mark is. You're going to maximize your profits. But most people don't look at that. Most people just say, oh, I made $100,000 last year. That's great. It's awesome. You might have been able to make 120, so.
All right, thank you. Our next question is, how do I know if I have the right record keeping system for my business?
Yeah, I would go back to the accountant on that, and whatever you can establish to make their life a little easier. I think that's the right recommendation, I would say. You're, as a small business owner, your job is to go out, get the business, process the business in the most efficient way possible. And I think people sometimes can get bogged down in the record keeping end of it. And not that that's not important, it's very important, but I would get with the accountant and say, how can I get this to you? What's the best way for me to do that? And go that way with it.
I agree.
Okay. And then last question I have, but feel free to drop more in the chat boxes, is what financial statements do you need to have prepared when you're meeting with the bank?
Most, usually it is if you have a business that has LLC corporation, you want at least last 3 business tax returns, all the tax returns for all the guarantors. If there's multiple partners, you would need for everyone a personal financial statement. Drawing a blank, Tim.
Well, we're in the time of the year right now where we're getting loan requests and we say, give me your last 3 years taxes. And that's, 18, 19, and 20. And we're really 2 months away from 2022. And so when our credit analyst looks at those and they say, we're looking at 2-year-old data. How about a year-to-date income statement or profit and loss statement, a balance sheet? And I always tell people, anytime you get after June 30th, get a year-to-date profit and loss statement. And you can take that and annualize it and kind of project out what the earnings are going to be for 2021. But yeah, the other stuff, the personal financial statement, the taxes, I get business and personal tax returns because I think most lenders are going to, when they spread a file for review, they're going to look at what the business does, but then also they're going to look at a global cash flow, and the global is going to pull in personal debts. So you might not have any debt on the company, and that looks great. But personally, you've got a Porsche in the driveway, you've got $1 million house, and you got boats and campers and all this stuff, and that can sometimes cloud the judgment of the bank a little bit. And they might say, the business doesn't really own anything, but this person's kind of living a lifestyle that's dragging down their debt service coverage ratio. So we're going to spread both of those personal and business returns.
So we're looking for questions from the group here. Just drop them in the chat if you have any. When it comes to business lending, I have this home style thought of a 3-legged stool, and tell me, Perica and Tim, if I've got this straight, because this is what I say. I hope it's the truth. The bank's going to look at how they're going to get paid back. They want C for cash. Where's the cash coming from? Look at that projection. Does it say that there's going to be any money? And then they're going to look at character, which means your personal financial statement. They're going to want to know, does this person usually pay their bills? So all of us in today's world probably are looking at credit score there. And then the collateral that Tim talked about, the personal guarantee. And I have clients come to my office and say, well, I'm not going to put my house up for this. And as the former business owner who had their house up for that, I think that the bank's not going to bet on your business if you're not willing to bet on your business. So Perica and Tim, have I got that straight? The 3 C's of that stool?
Again, 100%.
Perica, you got anything to add to that?
I think what they like to see before they make a determination is making sure the business has some skin in the game. Like there is something there. They're not just throwing money at a wish or want. They're actually potential there for the business to continue to profit or grow and bring money in, because they're not going to give you, $1 million and they're like, you're going to make me back 2 in a year. They want that plan. They want something, a foundation to grow from, not just, we're just not going to dig in the dirt and hope everything goes well.
I am sure of that answer. They are not going to let you just dig in the dirt and hope it grows.
Well,
I like that. I'm going
thing,
to keep it, Perica. I'm sorry, Tim.
No, the other thing that I think people need to, one thing that I always look at, if it's a new business, it has to make sense. And I like lending to people and not businesses. And if I believe in a person, it's going to go a lot farther than if I don't believe in that person. And sometimes what clouds my judgment a little bit is, if you're starting a trucking company and you need a semi and you're just starting out, do you need a $135,000 semi? Or should you maybe buy one that's 3 or 4 years old for 50,000? And does your business plan, are you going to make $200,000 your first year? And most businesses don't, and that's okay if you don't, because that's why we ask for a 3 or 5 year business plan. We want to see that growth. But a lot of times I see business plans that just people they're millionaires by the time 3 years into the business. They're millionaires, and I look at that and say, if it's that easy, why isn't everybody doing that? And so that's where it doesn't make sense to me, and where maybe people need to dial things back. They think that the bank wants to see this growth, but the bank wants to see realistic growth and what makes sense. And sometimes when you see projections like that, or an aggressive, I'm doing a startup business, I need $300,000. And most of it's going to pay my salary for the next 6 months until I get things going. And I need a $150,000 semi. To me, that tells you what Eric has said about skin in the game, that borrower doesn't have a lot of skin in the game, and they're relying on the assets of the bank to kind of self-fund things. And if things don't work out, then it's fine because they don't have anything in it. So I think people need to be realistic with that initial request. And you can always grow the business. You can start out with 50,000, and as the business grows, you can borrow another 50,000 or another 100,000. But just keep in mind, when you go into that and you start out initially with a $150,000 or $200,000 loan, you're making payments on that. From the first month in, you're making payments on it, and you might not have the sales coming in to support those payments. But the more money you borrow up front, the higher that payment is when you're just getting your business off the ground. So.
Erica, any words of advice from you on that?
No, Ken pretty much covered it all.
That's great.
So we do have a question in the chat box. It says, I'm in the process of changing my business name and rebranding with a new LLC. Will I need to get a new EIN for the fictitious name and new bank accounts for the business because of the name change?
Yes. Yeah, because it's going to be a completely different entity, and it's going to have its own pretty much ownership. So you'll have to start fresh. Now, when your tax returns, if it's mid-year, those type of things, they'll be able to see with the multiple tax returns. If maybe you went from a sole proprietor to an LLC, they'll be able to see that on your Schedule C. So that way you'll be able to determine that it was still the same business, just the entity changed.
I hope that answers your question.
That's a great question. All right, so as you see, before you log off today, Judy Porter has dropped a SurveyMonkey link in the chat box. Please take 2 minutes and fill out that chat box, or that SurveyMonkey in the chat box, so that we have feedback for our future webinars. And once again, I want to thank our panelists and our moderator, Miss Peggy Sinova, for participating today. We hope that we answered a lot of questions. And as a reminder, all of our recordings of our webinars live on our Wayne County Area Chamber of Commerce YouTube page. It's a great resource if you're looking for any of our topics. We have subjects on how to work from home and how to, we have lots on finances right now because we're just wrapping up this series, but we have other topics as well. So make sure you check out our YouTube page. Maybe Daniel can drop the link. I'm putting him on the spot here, but maybe he can drop the link so you can see all of our recordings of our past webinars. Today is our last webinar for 2021. That seems wild to me, but we will be back in January. We have lots of new topics coming up that are hot topic issues right now that I'm excited for us to chat about. So please drop us a comment thanking our panelists and our moderator in the comment box, and we will see you next year.
Thank you.
Thank you all.
Thanks, Roxy.